All right. Good evening and welcome to today's live webinar here at Crypto Base Media. You are very much welcome. Welcome to another live session, another live class here on Crypto Base um, Media. So today's topic is going to be straightforward. Yes, it's going to be straightforward, like very strict and focus based. Yes, we are going to be talking about um, how to use bybit, just like the topic for today's class. You understand? um, Mastering trade entries, mastering stop loss, and mastering take profit, all on bybit, using bybit exchange. You understand? So that's all we'll be focusing on today. So if you are just joining us, you tell us your name. I can see Mr. Kalu there. Welcome on board. So if you are joining, you tell us your name and where you are watching us live from. You understand? So we can all catch up and then begin the class right away. Your name and where you're watching us from. If you have joined, kindly do that quickly, so we can have more time to do justice to the topic. You understand? So quickly, your name and your location where you're watching us live from. So while we do that, I'll just um, go into the class already, so that we'll have more time to break some concept down to our understanding. You understand? So today we are talking about um, how to enter trades, placing stop loss and take profit, and also leverage and all that. Basically, how to place and manage trades on Bybit. You understand? So that you not go and lose more than the amount you set to lose, or excuse me, you will not lose the amount you set to lose, or um, lose all of your account, so to say, or at the end of the day, manage your risk very poor, in a poor manner. You understand? So how to enter trade on Bybit, how to manage it through stop loss, take profit and all that, making sure that you use the right leverage on isolated as a beginner and all that. So you understand? So that's all we will be focusing on today. Our main focus in this today's live class is basically how to enter trades. Either you are using someone's signal, or you did the analysis yourself. You understand? You are going to be discussing that, how to enter the trades on Bybit, how to set your stop loss the right way, the proper way, your take profit the proper way, and how to always use the right leverage to avoid liquidation. All of this is what we are going to discuss in today's class as time will permit us. So for the purpose of this today's class, I have a trade example that I'm going to be using. You understand? This is Pengu USDT. Of course, I use Bybit to analyze it. So I hope you can all see my screen and you can hear me clearly, so I can continue. Quickly, someone should please indicate in the comment section if you can hear me and you can see the screen very clearly. If you can see the screen very clearly and you can hear me audibly, please indicate in the comment section so we can continue right away. So I'll know that I'm not just talking. All right, very quick. So, all right, let's fire on. So, like I was saying, I said I have a trade example I want to make use of in today's class. So, this is Pengu USDT, one of the crypto pairs we have in cryptocurrency trading. So, in this particular analysis now our main focus is how to use these three digits here. Okay, let me Let me adjust this guy here so that you guys will understand what I'm trying to do here. So basically we are using 3 digits from here. So our main focus today is not about how to do technical analysis, so I won't be explaining anything on the chart here. Our main focus is these three guys here. The one in green, this digit in green, that's our take profit. This one in ash or black, depending on how it is in your own trading view or how you are seeing it from your end, that's the entry. Then this one in red, this is your stop loss that stops your loss in a trade that is actually going your opposite direction, or going against you or going south, whichever one. So you are making use of these 3 digits here. So this, the one in green is your take profit, the one in black is, or ash, is your entry, then the one in red is your stop loss. You understand? So you are going to be using this to be placing our order. Our This is a long trade, so buy or long limit order on this Pengu USDT on um bybit. So for example now, so I'm going to be using a $5 account on this particular example. You get, I'm using a $5 account on this for this example. Now I want to risk, let's say, 5% of this $5 account. Now I'm just using this example. I'm just using the account as an example. So whichever 5% I get on this $5 account, it's not the same for $10, $100, $50, $1,000, $500. You understand? So 5% of this $5 account is what I'm going to be using. You understand? The 5% I get is based on this $5 account. So um 5% of $5 account will give you 0.25. Yes, 0.25. Yeah, 0.25. So I'm going to be risking 0.25 on this particular trade here, this particular Penguin USDT. That's what I'm going to be um risking on the trade. You understand? So I want to get, since I've gotten the 5% of my account, that is I'm going to be risking that 5% on all of the trades I'm going to take on this $5 account, because I've chosen 5% already. Normally we are supposed to risk 1 to 5% of your portfolio or your account on trades. So you choose either 1, 2, 3, 4, or 5%. The maximum is 5 for a reasonable for maximum loss. 5%. There are some account you will not be able to, like, if you want peace of mind, or you can't chase the loss of 5% of that account, you can reduce it to 2, 1, or 3, depend on the one you can stomach, the loss you can take. You understand? So on this particular example, I'm going to be risking 0.25 cents, not even up to $1. So 0.25 cents. That's because that's the 5% of the account. So I'm going to be going to my I'll open my calculator now. Now pay attention now. For me to place this Penguin USDT trade properly on Bybit now, there's something we will need to take note of. I hope you guys are following. All right. So to take this trade properly now, we are going to be taking note of this SL here. Let me do something. So you take note of this percentage. This is your stop loss percentage. You understand? So whatever trade you are on, when you are done fixing in your entries, your stop loss, and your take profit at the right zones, then you come to your long or short position too. This is a long position too because it's a buy trade. So you take note of the stop loss percentage, the one in bracket. Then you divide the amount you are risking on that trade. by that stop loss percentage to give you your other value you are going to place on bybit. Now I know some of you by now you have the idea of if you want to do your risk management, you kind of like okay, you want to decide you want to enter the trade with, okay, for example now this $5 account, okay, you can say that okay, you want to enter the trade with $0.5 or $1 to enter the trade. So you do, and you want to use 10x leverage. So you multiply that amount you want to enter the trade with by 10x leverage. So if you want to enter the trade with $1 from that $5 account, you do $1 multiplied by 10x leverage. That is 1 multiplied by 10. It will give you 10. So you write 10 in your other price here, this place, that they are showing quantity there. So you now write 10 here and then put your price there. Let me change this to our pair that we are trading today. So for those of us using laptop, once you are searching the coin, you take note of two sessions. Two sessions normally pop up, you understand? We have the perpetual section and the spot section. This one is spot, this one is perpetual. So the perpetual section is the one we are concerned with. So you will look very well to see the name of the coin. This is Pengu USDT. So in mobile phone, you will see it in just one section. You understand? So when you search, make sure you see USDT perpetual below the name of that coin. Then you know that that's the right coin. So I'll select this one since it's on under perpetual section. So I'll select, so it will automatically change it from the current coin to my desired coin. So now this is Pengu USDT. Now when you open your Bybit, you make sure that this isolated here is not on cross or portfolio. Make sure it's on isolated. Then the leverage is what you will adjust or modify it when you are done imputing your entry price, your other value price, then your TP and SA. You understand? So when you are done with those ones, then that's when you adjust your leverage to see if your stop loss will hit first before your liquidation price. So now for those of us with that kind of risk management, it might not work all the time on all trades because there are some coins that the way they move is quite different from each other. Volatility matters, and stop loss percentage. There are some stop loss percentage that are higher than each other. You might analyze a pair and then the stop loss percentage might be very very high. So if you use that pattern of entering with so amount and using multiply by leverage, you might lose more than you want to lose on that trade. So the best way to avoid losing more than the desired amount is to look at the stop loss percentage on that trade. Like for this example, we have 4.35, 4.35, you get. So you divide 0.25 by 4.35 percentage. Someone please help us with that calculation. Go to your calculator, input, just put it in raw digits, 0.25, then you put your division symbol, divide, then you put 4.35, then you put the percentage symbol after that, then you tell me what you get as your value or your answer. So quickly, someone should help us with that expression real quick. 0.25 divided by 4.35 percentage. Real quick, please. Anyone? 0.25 divided by 4.35 percentage. Quickly. Time is against us. Hello, somebody should help us that calculation now. Or are we not following? I said 0.25 divide by, okay, Mr. Victor, 5.8. Let me see. Yeah, I guess you did the approximation. 5.74. So you approximate to 5.8. You are correct. Um, I said you divide the 5% of your account by your stop loss percentage, and the 5% of this $5 account is 0.25 percentage. Sorry, 0.25 cents or $0.25. That is the amount I'm supposed to be risking on every trade I'm taking on the trade on the account. Sorry. So based on this particular signal now or trade, I have 4.35 as my stop loss percentage. So I'll divide that my 5%, which is 0.25 cents, by 4.35 percentage. Now it will give me 5.74. You can type that in bybit or you approximate. You understand? So going over to bybit now, since we have that, mind you, that answer or value you get after that expression or after the calculation, that's the other price you enter. That's the other value on the second box on bybit. You get. So first things first, make sure that it's on isolated, um it's on limit also. So you check very well if it's on isolated margin and it's also on limit section. So the first box now is your entry. You understand? So you're picking your entry from your signal 0.033570. 0.033570. Now the second box, mind you, this second box usually comes with something funny. Make sure that whatever you are seeing on the right hand side is not the name of the coin for a perfect risk management. You change it to order by value, which is USDT. You understand? You click on that small arrow down. You see order by value, not order by quantity. Order by value. You change it. If yours is showing the name of the coin, click on that small arrow and change it to order by value. Then you confirm. You see, it has changed to USDT. But if it's on quantity, it will be the name of the coin, like the quantity of the particular coin you want to buy. That's why it will be showing the name of the coin, that Pengu, BTC, Solana, BNB, XRP. So on quantity is the name of the coin, but for this particular risk management, you should make sure that it's on order by value, which is USDT, by the value. That's why I said order value. So that calculation is to get the value, the order value. Understand? So order by value, confirm. So our order value is 5.78, or let's say 5.8, based on approximation. You understand? Then TPSL box, you activate it. You activate your TPSL box. Now, first thing first, type in your stop loss to see if you're actually going to lose that amount you said you will lose. You understand? So this stop loss now, you impute it from trading view or from the signal given to you, 0.032109. You understand now? So you look very well, you see expected loss 0.2524. You understand? So this is now our expected loss, because we have done the calculation that if the trade goes against us, we want to lose 5% of our account, which is 0.2524, and which is minus 34.81 percentage of the amount we are entering the trade with. You understand? So very you see now you take note of the cost to see the amount you're actually entering the trade with. So we are entering this trade with 0.731 USDT, or 0.73 cent. And we told Bybit that, okay, oh, if the trade goes against us, so we want to lose 0.25, which is here expected loss 0.2524. You understand? So we are going to lose minus 34 percentage of this 0.7. Bybit is going to take away minus 34 percentage of this 0.73, which is 0.25 percentage. I hope you're all following. So now we are okay that the amount we want to lose is what you are seeing here. You understand? Now the next thing is take profit digit. First of all, we are concerned with the amount we want to lose first, to make sure um is what you are seeing on that box before you type in your take profit digit, because as a trader you should always be concerned with the amount you are going to lose first before thinking of the profit to be made. So you type in your TP digit now. If the trade goes in your favor, you type it here. So 0.039254. You understand? So this is it. Since I'm risking 0.25 cents on the trade, I'm going to make back 0.9820, almost $1 on this trade if it goes my way. And now this is because of the risk reward ratio. Now on this particular trade now, we have almost 1 ratio 1:4. So let's say if you are risking $1 on this trade, if it goes to your TP, you will make 3.89 USDT back as your gain. If you risk $100, you will make back 389 USDT, or $389 back. You understand? So we are risking 0.25. When you multiply by 3.89 in your calculator, it will give you this expected profit, 0.9820. So I hope you are all following. So that's it. We want to lose a particular amount and we are seeing it here. Okay, good and fine. Expected profit, um, risk amount multiplied by risk reward ratio will give you expected profit. So now the next thing is leverage. You understand? Leverage. Now this one is on 8x. Normally they tell you to use the 10x leverage as a beginner to avoid liquidation and all that. Now, liquidation comes as a result of distance. How close or how far is your liquidation price away from your stop loss? So let's increase this leverage for proper understanding. I've set it to 25x leverage now. Now we are taking a long trade, so click on long. You understand? Now, on this particular interface now, let me confirm something. If your Bybit is not bringing out trade confirmation whenever you click on buy, or whenever you click on uh, buy long or sell short, you look up on your screen and you see that a particular setting for you to activate um, that confirmation window or something like that. I think it should be here. Very good. General, you go to the settings there. On your mobile phone, it's on three dots. Click on the three dots. You click on confirmation or pop-up confirmation window. You click on it. You can see it there. The one you activate is um, order confirmation. You make sure you toggle it on so that confirmation window will be popping up, so I can see liquidation price and your stop loss price. You understand? So this is it. It will give you all the credentials of your trade setup, your signal. So the first one is your entry 0.03, um 0, it has changed. That's not the entry. 0.0335770. 0.0335770. You understand? There are sometimes that when you're on your exchange, there are some settings that will change if you click on something or you minimize and come back. Some settings might change. So you take note of all what you have set. You take note of all what you have set already before. Make sure that they are same. If they are not the same, input all the digits or um, make those settings again before you click on buy long or sell short, so that you not enter the trade at market, or your entry will be far away from price or not at the right zone. You understand? So just like what happened just now, you see, when I went to settings and came back, the entry price changed. If I wasn't lucky enough to observe and notice it, I'll just click on uh, buy long, and probably my entry will be somewhere uh, somewhere very far. Let's say somewhere here, and other people signal or trade might trigger and mine will not trigger. So you understand, you take note of all these things when placing signal on bybit or any exchange. When taking trades on any exchange, you calm down, don't rush, take your time, make sure everything is correct before you click on buy long or sell short. You understand? So I have to impute, okay, everything is here. My stop loss and my take profit, nothing happened to them. So you understand? So now, once you are done with that, I increase the leverage to 25x leverage, just to explain something. I hope you are all following, please. Okay, Mr. Khalif, cross margin and isolated margin. I will explain that when I'm done with this um, explanation. So I increase it to 25x leverage to explain something to us. So it's a long trade. I'll click on long. Now, your confirmation window will pop up. You understand? So the first so these are all your credentials of that trade, or your signal. So this is your entry order price, which is 0.033570, which is you are telling Bobby that once the value of that market of that particular asset comes to this price, then it should take you in. It should take you into the trade at that particular market price. You understand? Because whenever you want to take a long trade, you wait for it below current price. This is our entry below current price. And if you want to take a short, you wait for it above current price. So it will go up, trigger, and then start going down. And if you're long, it should come down, trigger, and start going up based on analysis, technical analysis. You understand? So now you have to take note of two things, or two digits rather, in this confirmation box. You take note of your estimated liquidation price and your stop loss. Now your stop loss is the one you set by yourself when imputing your stop loss and your take profit digits. So normally you know that 0.032109 is your stop loss. That one you know already. Then your liquidation price now. When taking a long trade, make sure your stop loss is way above your liquidation. That is, this one in red should be higher than this one in yellow. You understand? If it is vice versa, you adjust your leverage below. You reduce your leverage. You understand? Which is why they normally say, as a beginner, you should use 10x leverage. But sometimes when taking some particular trade, 10x leverage might be too high, that your stop loss and liquidation might jam or collide, or vice versa, be higher than each other. instead of the other way around. So that's why I said it all boils down to your stop loss percentage. If your stop loss percentage is way higher, let's say 9%, 10%, or 11%, that the stop loss percent from trading view is higher. If you use in some trade, if you use 10x leverage, your liquidation, let's say you are taking a long trade now, and your stop loss percentage on trading view is way higher than this for, let's say, 12 or 19 percentage SL percentage. Using that 10x leverage might put you at risk of hitting your liquidation first before your stop loss. So understanding this basic will give you that knowledge of knowing that it's not about using 10x leverage as a beginner. No, it's about using a particular set stop loss that is far away from liquidation. So having that knowledge to make you to use a particular leverage that will determine that for you. So it's not about 10x leverage as a beginner. You understand? It's about the distance between your leverage, between your stop loss and your liquidation, based on the leverage you use or you are allowed to use on that particular trade, to make sure your stop loss and your liquidation have much distance in between each other. So in this particular example now, we have our liquidation price as 0.003. So sorry for that. I needed to check something. Estimated liquidation price now. Now this is a long trade. You are not supposed to have our liquidation price higher than this our stop loss. Now this one in yellow is not supposed to be higher than this. Your stop loss is supposed to be higher than your liquidation. So you check these two digits, red and yellow. This one in red should be higher than this. If it's higher, then you can use this 25x leverage. So 0.03244.5, is it higher or lesser than 0.0321009? Remember, the rule says in a long trade, SL should be higher than liquidation. Now, if you check very well, this is higher than this, which is not supposed to be so. This one is supposed to be higher than this one. So you go back and reduce your leverage. You understand? You reduce your leverage. Let's say 15x. Use 15x leverage. You click on buy long and you check 0.31544, 0.32109. You can see this 15x leverage now allows you to take this trade and successfully hitting your stop loss first before your liquidation. So you are good to go with this 15x leverage. You can see, but to give it more gap, you can use 10x leverage and your liquidation will be very far from your stop loss. Now take note, this is 0.0315544 and this is 0.02. Now let's reduce it to 10x leverage and you see the high distance it will give your liquidation, your stop loss rather. So you understand? You see, very much distance. So the more you reduce your leverage, the further your stop loss goes from your liquidation and the more USDT you are required to enter the trade. You understand? Let me show you. Now, when it was 15x leverage, So it is your leverage now that will determine the cost, which is the amount you are cost is the amount you are entering the trade with. So at 15x leverage, our cost is 0.58. So we are going to enter this trade with half a dollar, which is 0.58. You understand? 0.58. So the more you increase your leverage, the lesser the cost. That is the lesser amount you have to enter from your own main portfolio now. You understand? So if you use high leverage, means you are borrowing more money to enter the trade to open your position size for you. So it will require you to enter less of your own amount. So the lesser the leverage, the higher the cost, which is when you borrow less money, you'll be required to enter more of your own um portfolio. You understand? So at 15x leverage, the cost is 0.58. That means bybit to use we take 0.58 from our balance to open this trade for us. But if it goes against us, they will minus 0.25 from this 0.58 and return the balance to the rest to our balance. So we click on long. This one is okay to take the trade, yes, but to okay, let me explain something now. Let's use 10x leverage. At 15x leverage, the cost is 0.5861. Use 10x leverage, you will see that it will require you to enter more of your portfolio. Okay, I've been using 15. It's not changing. Okay, 25x leverage. Very good. Now we are borrowing more money to enter this trade to give us our position size. That means we will be using less amount on the trade, which is you see zero at 15x leverage it was $0.5. Now using higher leverage you use less of your own amount to enter the trade, but the higher the leverage also, the higher the risk, meaning your liquidation price might be higher than your stop loss or the same, which will make you to lose all of your cost. Everything will be burnt to ashes instead of losing a part of it. You understand? So you use 10x leverage or the 15x leverage we are allowed to use on the trade, this particular trade example. So you click on long. Check very well if on a long trade your stop loss should be higher than the liquidation. I repeat, long trade stop loss should be higher than liquidation. You understand? On this particular trade, you can even use 12.5x for those of us that love seeing higher percentages. As stop loss, your percentage will be 169 percentage and P&L. But if you are the type that loves seeing bigger percentage, maybe you want to increase it to 12.5, you can see take profit. Your P&L will be 211. You understand? So you can use 12.5 also. It's not that much to be 10x leverage. It's not every trade that you are permitted to use 10x leverage. It depends on the stop loss percentage. So on this particular trade now, very good, very good. So the cost is now other cost. We are entering this trade particularly with $0.46 to lose 0.25 inside this 0.46. And it looks like if we are entering the trade with $5.7, almost $6, whereas we are just entering with 0.46. So you see the magic now. You use less to open the trade, but you borrow more to open the trade for you. So once you are done checking the stop loss being higher than the liquidation in a long trade, then you click on confirm and your trade will be in the order section. Once the value of the coin comes to that particular level in value, this trade will move to the position area. That means your trade is active. You understand? Your trade has been triggered, and then you'll be on the trade. If it goes your TP, you make profit. If it goes against you, you lose a particular amount you said you want to lose. I hope you are all following. Okay. Mr. Khalif, back to your question. You asked about cross and isolated margin. Cross margin, for example now, cross margin simply means since we are entering this trade with 0 point, let me do something. Okay, we are entering this trade with 0.58 dollar or 0.58 USDT. Now, if you use cross margin and let's say this trade start going against us, what cross margin normally does for it, majorly cross margin is for those that are doing DCA. You understand, DCA, so that they can enter give DCA give them new entries. They will just add to their margin and then they will get a new entry for them to uh, keep on holding that position. So that's what cross margin is basically for those that are doing DCA. If you are just a normal stop loss trader, I don't think it will still be like you still using isolated, but why not use isolated if you are a stop loss trader and just stick to it rather than using DCA, because cross margin works smoothly for those that are doing DCA, because if the trade start going against them, for example now, they will add to their margin. Margin is the same thing as cost. By Mexi calls it margin. I think Wix also. Bybit calls it cost. Yeah, the language here is cost. This cost here, that is the amount you are entering the trade. You are entering the trade with 0.58 on this particular example, 0.58. So if let's say we are on a cross margin now, and you didn't set your stop loss, so if the trade start going against you and then it comes down to your liquidation price, because you didn't set stop loss to lose a particular amount now. If it comes down to your liquidation price, you are going to lose all of this amount to 0.58 instead of 0.25 cents. You understand? And it also works on higher account, bigger account also. It's not necessarily this particular $5 account. If you enter, let's say your margin is like $50 and you didn't set stop loss, it's if you start going your if you start going against you, you lose. And then let's say the trade start going against you, for example now, and then it gets to your liquidation price, you lose all of that $50. But now what cross margin helps you to do now, that's why I said this, it works smoothly for DCA traders so that they can add to their margin. What it helps you do now, it will start tapping from your balance. It will start tapping from your balance to power up that your position size, to add up. It will start tapping from your balance, um, tapping money from your available balance to keep on powering up that position size, that trade, so that the trade can continue being active or being alive for it to keep on holding. You understand? So it will start tapping from your balance, and if it finish up anywhere you have money in your exchange, it will start tapping from there also. That's why it's called cross, as the name implies, cross margin. It will cross over. Instead of closing the trade at a loss for you, it will start crossing over to anywhere you have money in your exchange and start powering up the trade for you, adding to the position size so that the trade can continue going on. So as a DCA trader now, you add to your margin and then you get a new entry. And getting a new entry now, it will reduce the loss and give you a new entry. To reduce the loss and give you a new entry. So if you start going your direction from that point, you'll be in more profit um other than that's your initial first entry. Sure you get. So what isolated, that's for cross margin. What isolated helps you to do now, which is why they always recommend it as a beginner, is because in isolated margin, as the name implies, isolated means using is restricted from doing a particular thing. So isolation means keeping something in one particular restricted area to do a particular thing. So isolated margin is the type of margin that lets you enter a trade with um, a particular amount, and then your SL will be charged from that. Let's say for example now, this particular trade now we are entering the trade with 0.58 based on our leverage, 12.5x leverage. We're entering the trade with 0.58 USDT and we are risking 0.25. You understand? So let's say we didn't set that stop loss to lose 0.25 cents or USDT. If the trade goes to our liquidation, we will lose only this 0.58 and then the trade will close, and that will be all for the day. The trade will close. It will not tap from our balance. You will lose all of this, your cost. If you enter with $50, you lose all that $50. If you enter with $200, you lose all of it. If you enter with $1,000, you lose all. If your margin is $1,000, 500, whatever, you lose all of it if you didn't set stop loss. But if you set a stop loss to lose a particular amount, it will close at that loss. It will close the loss for you at that with that particular amount and then return the balance to your return the rest to your balance. If even on cross margin, you understand, even on cross margin, if you use stop loss on cross margin, it will close the trade with that particular amount. It will close the loss for you with that particular amount and return the rest to your balance. You understand? So cross margin is basically when you don't set stop loss, it will liquidate that particular margin and then start tapping from the balance. But in isolated, if you don't set a stop loss, you will just lose all of that margin, that particular margin you used to open that trade, and then the trade will just close. It won't tap from balance. That's the difference between isolated and cross margin. So that's it about these are just the basics on how to enter trades, place your entry, your stop loss, whatever. Sure you understand. Okay. Um Mr. Victor, your question is based on a particular class we'll be holding subsequently. You understand? Um, Basically, we are focusing on mastering trades, trade entries, stop loss, take profit. Simply means how to um, enter trades using entry, stop loss, and take profit, and how to place them effectively on your exchange, basically on bybit for proper risk management. That reminds me, if you are here with us here and you don't have a bybit account, maybe what you are doing here is kind of strange to you, like you haven't seen any of these features on this particular exchange before, like even you or you haven't heard of bybit before. It's an exchange where you can buy, sell, store, and trade cryptocurrencies. You understand? So Bybit is an exchange you can use, just like Binance, just like KuCoin, Gate.io, and all that. So if you are here, you don't have an account, you can do well to sign up, have an account, so you can have a Bybit account to be following up with us, so that you can catch up real quick with all what we are doing here, because all of our teachings is majorly focused on Bybit exchange. You understand? So all of the times you are using Bybit exchange. So if you are here with us and maybe all what you have been saying here and showing us here is kind of has been strange to you, maybe you are not using Bybit, you can just sign up with the link in the group, have an account, and then if you can deposit, fine. I believe there is reward for uh, depositing after signing up. So you sign up with the links in the group, have an account then, so you can be following up with whatever we are doing here. Even if you don't deposit, you can follow up with the demo account if you are a beginner still practicing and trying to get around with all those things. You understand? So that's by the way. Okay, the question, trying to place a trade with 10x using with 10, I believe you are okay, with 10 using isolated margin with 5x, but the leverage of 50 was not triggered even when I select it. Okay, I didn't get your question straight.
Okay, you are using you want to use 5x leverage, and then you want to enter a trade with $10. So you multiply the trade, sorry, you multiply your desired amount with your leverage, which is you want to enter the trade with what's it called, 5x leverage with $10. So you multiply 10 by that your leverage, which is 50. Now that 50 now, you type it in your second box, which is your other, this other one here, this second one. So you type in here, you type the 50 here, this selected box, you type the 50 here. The first one is for your entry, then you select that 5x here. So it will now look like you are entering the trade with $50, but you are just entering with $10. You understand? So you set your stop loss, you take profit and click on buy long or sell short, and then the trade will be placed in your other section, just like the one we just did here. It will be placed in your other section, waiting for price to come to that particular value, and then the trade will trigger and move to your position size. That's what will happen. So maybe there's a mistake in your digit, your entry digit or something. That's what can only make trade not to trigger. There are sometimes that liquidity issues might arise, but most of the time it comes from a mistake of digits in entries, maybe misplacing one digit, or maybe not even selecting the right coin. It might also uh, cause that, because there are some coins that have a similar value. You understand? There are some coins that have similar value like this Pengu USDT, and then maybe I didn't check very well. I just pick another one that looks the same price like this, and I will just place entry, place what's it called? Um, Entries, other values, stop loss, and all that, and I start waiting for it to come to that price. But since it's not the same coin with my analysis, it might not trigger. You understand? And most of the time though, it comes as a result of entering the wrong entry digits. Like when if you are with us when I was explaining and how to activate that confirmation window, when I went to the settings side and came back, my entry changed. So I was lucky enough to observe it and then retype what my entry is. You understand? So most of the time, if your trade not trigger, it comes as a result of uh, mistake in the input of digits and some other things. Majorly, and the digits or the name of the or the particular asset or coin you are trading. So you take note of everything. If you are placing trade on your exchange, you take your time very well, make sure everything is accurate. That is why limit is advised, because you take your time, you place your order and wait for price to come there and trigger your trade for you. You understand? So that's what will happen. If you multiply your amount you want to enter the trade with, multiply it by your leverage, type it in your other value box, set your SL and your take profit. Click on buy long or sell short, and that's all. There's no other two ways. There's no two ways about it. So that's that about that. Okay. Firstly, I use $5 trade. $5 trade was not triggered. Okay, it didn't trigger. It was saying notional value must be okay, okay, okay. The reason why is because if this place, this box now, whatever you are typing here, if the other value is not up to 5, it will it will say that particular prompt. That prompt will come up. It simply means the value, the order by value should not be less than $5. So that 5, less than 5, they are saying that 5 is in dollars because it's in value, USDT value. So if whatever you are typing here is less than 5, it will not go through. Yes, at least it should be 5 or more than 5, not less than 5. So if it is less than 5, it will not go through. That is when that prompt normally comes up, and then you feel like you are doing something wrong, though you are still doing something wrong, or you are doing something you're not yet knowledgeable about. Sha. So that's it. If this second box now, this is the other value or other price box. You understand? So whatever you're typing here should be 5 or more than 5. Either 5, 5.1, 5.2. In this case, we have 5.8. So that was why we were able to enter this trade and place our order. So whatever you're typing here should be 5 and above, not less than 5. It won't go through. It will keep on bringing that prompt. Sure you get. Okay. Um, I think there's a question. There's a question. I think there's a question. There's a question from, okay, how can I draw this pattern during analyzing, and what measures is more profitable using time frame to analyze? Okay, this is not the focus of today's class, but for benefit of doubt, so, using time frames to analyze, using time frame to analyze comes as a result of using the higher time frame to know what the trend is actually doing or what is going on in higher time frame first. Then you can scale down to the medium for entries or lower time frame for entries. You understand? There's no best time frame, whatever. It depends on the one you see your setup in. You understand? So on this particular trade, when I was analyzing, I came to the 4 hours time frame and I saw everything I need to see. I didn't even scale down to any time frame or although I checked, I didn't start from one day though. But I when I came to trade, it was on 4 hours already, and I saw all what I needed to see. And then I just checked the 1 day time frame, and the 1 day time frame is also bullish. So that gave me more confidence and more confirmation that yes, if you should come to that my um area of interest or point of interest or entry, is more likely to reverse and take out that external high on the 4 hours time frame. So you understand, it depends on the patterns you're always seeing, what you need to be seeing every time. You understand? And then the time frame that actually gives you that good and profitable entry. You understand? As an SMC trader, you know that your order block should be valid when this and this is met. You understand? So it depends on the time frame that you go to that you see that particular type of clear and profitable high probability order block. So there's no best time frame or whatever in analysis. Depends on the one you go to see the clear structures and then your high probability entries. You understand? So that's it about it. I hope I was able to answer the question very much. So I'll take few more questions then before I'll call it a day here. So if you have question, you can drop pertaining entry trades, using stop loss, maybe having difficulty in entering trades in your exchange, um, how to set stop loss or maybe leverage something. Um, if you have question concerning that, you can drop it. Okay, Mr. Prosper, how can I enter a trade with $10 on a $20 account with 25x leverage? Please, can you explain about it? Okay. The thing is, you lose all of that $20 if you want to enter a trade with um okay, let me even explain it to you. You want to enter a trade with $10 on a $20 account. Firstly, risking $10 on a $20 account is way too high. It's not safe, it's not healthy at all. Now there are some times that if you want to, okay, let's say for example you want to risk the $10 on that $20 account now, the cost might be higher for you. That means you might require more um USDT to open the trade for you. Let's say for example now, okay, let's say for example I have um let me do something. Okay, Let me change it to 25 first leverage and see if we can get cost that will look $10. Cost is 8. Let's say 250. Very good. Now you can see I'm just using this as an example. Let's say our order value is 250. It will look as if we're entering the trade with $250, but we're just entering the trade with $10. You understand? So now, let's say for example now, I have $20 in my balance. For example, in your own case now, you have $20 in your balance. I want to um you want to enter the trade with I don't think that's even the question. You're asking if you can risk. Okay. If you can enter a trade. Okay. I get the question now. I get the question. Not risk. You're asking of margin. So take for example now, you have um $20 in your balance, and now the cost based on your this thing now, your okay, you want to enter the trade with $10. You can multiply that 10 by that 25. It will give you 250. Yeah, but most of the time, sometimes when you set your stop loss, this particular type of calculation might make you to lose more than what you set to lose, which is why I would advise that stop loss percentage calculation. So now the cost is now 10.26 USDT. Means you are entering this trade with you're going to enter this trade with $10. So inside the $10 is what you will risk. So on a $20 account, you have to risk 5%, which is $1 per trade. In all the trade in that $20, you're supposed to be risking $1 per trade. So it's inside this $10 that Bybit will deduct one if you hit your stop loss and return 9 back to your balance. But then you make sure that if it's a long trade, make sure that your liquidation is is lower than your stop loss. Make sure your stop loss is higher than it, so that it will trigger your stop loss first and you will lose that $1 and return the 9 to your balance instead of losing the whole of this $10. Because if the trade should hit your liquidation price first, you lose all of this $10 and you'll be left with only $10. But if it hits your stop loss first as a result of using a particular leverage that makes your stop loss should be that makes your stop loss to be higher than your liquidation, you will lose just $1 that you say you want to lose, and Bybit will return the remaining 9 back to your balance. You will have 19 USDT instead of 10. Sure you get. So it doesn't matter the cost or the amount you're entering the trade with. Just make sure that if you are taking a trade, your stop loss should be far away from your liquidation and you'll be safe. You hit your stop loss and lose that particular amount instead of losing the whole of the amount you entered the trade with. You understand? So that's it about it, Mr. Ifine. Okay. Aside setting stop loss to be higher than liquidation price, is there anything to consider to avoid losing all in trading? No. Just make sure that your stop loss is higher than your liquidation. Sorry, there's a gap between um your stop loss price and your liquidation price. Basically, in a long trade, your stop loss should be higher. In a short trade, your stop loss should be lesser, because you want, if it goes against you, normally if it goes against you, it's the opposite direction. So your in a short trade, your stop loss is above entry. So you should meet your stop loss first before your liquidation. In a long trade, your stop loss is below entry. So you should meet that stop loss first before the liquidation, which is below your stop loss. So to make sure that is correct, you set a particular leverage that uh, will make your stop loss to be far away from your liquidation by clicking on this buy long or sell short and checking that confirmation window. Check the two digits, the one in yellow and the one in red. Make sure they are far away from each other. If you are taking a long trade, make sure your stop loss is way higher than the liquidation price, and vice versa for short trades. So that's just it. Once you are done with that and clarifying that there's much distance between the stop loss and liquidation price, then you are good to go. You place your trade and wait for it to trigger. So that's all. That's all. No more any other thing to consider before anything, nothing like that. Once you have done that and you know in your mind that you've done it the right way, the next thing you just wait for it to trigger your trade, and then if you move to your direction, you make money. If it goes against you, you lose that particular amount you said you want to lose. Okay. On your example here, what was the amount of dollars you are trading 5% on? Okay. Um I'm using a $5 account for this example. So the 5% of $5 or 5% of 5, mathematically 5% of 5 is 0.25. Yes, 0.25. Let me see. 5% of 5 is 0.25. So on every trade I'm trading on that $5 account, I'm to be risking just 0.25 cents on every trade. If I'm using $100 account, 5% is $5 per trade. So I'm to risk only $5 on every trade. If I'm risking $200, if I'm using $200 account, it's $10 per trade. That is 5%. But if you're not okay, you can use 2%, 3%. It depends on the amount you can stomach. Person like me, I'll use 5%, which is $10 per trade. Understand? So on every trade on that account, I should be losing just $10 or less and not more. That I'll not um, finish up my capital in few trades. You understand? Or be in massive loss anytime I hit stop loss. So that's just it. The 5% is just basically for you to know it at the back of your mind that okay, if I hit stop loss, this is the particular amount I'm going to lose. So 5% um of your account is, if 5%, if you do your calculation, once you hit stop loss, make sure that that's the amount you lose. If it's 2%, make sure that's the amount you lose. If it's 1%, make sure that's the amount you lose. You understand? So that's just it. Then you set your entry, your stop loss, your take profit, and then you're set and everything. Yeah, then you're good to go with that. No any other thing apart from that. Percentage is basically the percentage that I've been talking about on this particular in this class is just two percentages. Number one, the first percentage is 1 to 5% of your account. If it's 5% of your account, you do your calculation. Go to your phone calculator, do 5%. You type 5, put the percentage symbol, and then type in the amount of your account. If it's 100, just type 100 after the percentage symbol. If it's $50 account, type 50 after the percentage symbol. So it depends on the account you are using. So you do 5% of the account, or 2%, or 1%, depending on the account you are using. So once you are done with that, for example, you deposit $100 now. I want to be using 5% on all trades. You first of all ask yourself, I want to be using 5% of this account. What is 5% of this account? That means you're asking yourself, what is the amount I'm going to be losing on all trade if it goes against me? So you go to your calculator, you do 5% of 100, it will give you 5. If it's $200, is 5% of 200, it will give you 10. So on all trade, that's the particular amount you should be losing. It can be less, but not more than. You understand? So that's the first percentage I talked about. Then the second percentage is um the stop loss percentage on your analysis on TradingView. So you divide the amount, let's say for a $100 account, I know the 5% already at the back of my mind that on all stop loss I should be losing 5%, which is $5. In $200 account, I should be losing 5%, which is $10. So let's say $200 account, I want to lose $10 on all trade. Let's say in this particular trade example now, I will divide 10 divide by 4.35. This is the stop loss percentage. So you divide risk amount by this one. So whatever answer you get or the value you get in your calculator, that is what you type in here as your order price, as your order value. So just basically basic and a basic key concept, you understand? So when you follow it appropriately, then you make the right trading decisions and then manage risk properly. So that's that about that. So thank you very much for your time. Thank you for your attendance. Thank you for your questions. Thank you for your contributions. Most of all, thank you for your devoted time in attendance and coming to the live class here at Crypto Based Media. Um, it's a privilege to be amongst you. Um, and it's also a great honor to be your host this evening. Thank you for the time once again. We appreciate. Thank you for coming out. Thank you for your questions. Thank you for the insights. Thank you for the contribution. Thank you very much for coming out. So, uh, till the subsequent classes we'll be holding. So for now, we have come to the end of today's live webinar. Thank God for the success of it. Thank you for coming out. Thank God for the success of it. No network glitch, no distractions, no calamity or havoc. Thank God for the success of it. Thank God for seeing us through. So thank you very much for your time. Uh, from me, myself, and I, and Crypto Based Media, I will say a very big thank you to you and a blissful night rest to each and every one of you here. Thank you for coming out in your numbers. It wouldn't have been a thing of success if I was the only one here talking and talking and talking. It would be of no value. You understand? It would be of no essence talking to myself here. So thank you for coming out. Thank you for your time. Peace and love. Thank you very much. Good night to you all. Stay safe and stay sharp. Trade smart.